Good morning, everyone. If you're wondering how much gas is left in the gas tank for Bitcoin and the S&P 500, this video is for you. In this video, I'm going to be looking at the 4-year cycle lows, not only for Bitcoin, we're going to look at also S&P and gold as far as the half-year cycle low or the 2-year cycle low, in which I'm going to be looking to get into gold here in a few months to probably a year. So let's start out with Bitcoin. If you see these cycle lows, this is kind of where we bottom. If you notice going up, we spend a lot more time going up. And then cycle theory, that's 3 years going up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down. The thing to notice is that these extreme highs are getting lower. A lot of that is just the dried up liquidity. It's becoming more of a mature market. So more people are owning Bitcoin, but it's also diminished returns. So asset classes can't go up forever. So as we start seeing more 4-year cycles, the amount of returns or percentages are going to drastically drop. So I got involved about here into like the last part of the cycle. I went all the way up and saw Bitcoin hit 20K. I was buying Ethereum up here at 1500, right? And then it dropped down. I held it all the way down to like 88 bucks with COVID, right? But to me, being part of this cycle, I knew that the bottoming was going to happen. And what Ben Cowan and Bob Lucas say all the time in their videos is trust a 4-year cycle until you can't. So this is what we have to kind of go off of, is looking at these different cycles. I think everything with the United States dollar being not trusted as much, and Bitcoin showing that it's a great alternative for value, it's not surprising that we are running out of time. So within the next probably 3 months, you're going to see the time window to hit this top be done. And at that point, it's another year down into the abyss. My prediction is probably going to be about $40,000 to $50,000 per Bitcoin. We'll drop all the way down to that part of the low, probably maybe even lower, depending on where we are with the recession. So the next video I want to share is a really good one that I found on X, and I really like this video or this chart because it kind of shows us where we are. Right. So this is a moving average depicting all the different types of all-time highs for Bitcoin. So if you remember the chart, this is kind of where I got in right here. No, sorry, I got in right here. No, that's right. This is right here at 20,000, 24,000 right here, dropped all the way down. And back up. The thing that you'll notice with these cycles is that anytime the moving averages hit the previous all-time high, that means you have about 2 months left. So if you look at this, you probably have a little bit more time to get to that peak, but we're really running out of time. So that's why I'm saying probably January, if not February. But for me, I have a dollar amount in mind. So once my Bitcoin and altcoins and Ethereum hit a dollar amount that I have in my mind, I'm going to sell. There's a lot of more adventures I want to do. There's a lot more investments into gold and other commodities that I'm just looking into. So for me, it's to take profit. Here is when I was really getting kind of greedy and thinking like Bitcoin and Ethereum are going to go up, up, up. And I ended up losing my shirt. I bought Ethereum at like $1,500 and watched it drop all the way down at the very bottom to like $88 with the COVID crash. But I knew like if I loaded up more that the cycles are going, and obviously we've been through 2 more cycles after that. So that's my strategy. And again, as Ben Cowan says, if it's not broke, don't fix it. So until we see a 4-year cycle break, a lot of people talk about those parabolic moves, which I don't necessarily agree with. I just think that a cycle ends and it restarts. I mean, that's just how we look at cycles just in general, not only in trading, but also just in nature. Cycles are something that is imprinted in what we do as human beings. Now, this is the S&P 500. The reason I like this chart better is there's more cycles, right? Looking at the 4-year cycles that go all the way back. This is probably an outlier right here. But what I would say is that these 4-year cycle lows, there's reasons why they are printing the way they are, right? We're toward the last part of the cycle where you're again going to have another year down, just like we saw in 2022, right? So the cycle down is where I kind of am going to DCA in a lot more. And that's why if you looked at my last video about using margin in a very safe way, I plan on, as it drops, not only using my cash to buy more, but then also using margin to load up more on stocks that I think are going to hold value. And the last one I want to kind of show you is gold. So this is the 8-year level for gold. So we're going to should start seeing that four-year cycle low. So I said 2-year cycle, but I meant 4-year cycle earlier. And that's where I plan on getting in. I do think gold is going to pull back to maybe low or mid 3000s, maybe 3600. And that's where I'm going to try to get most of my exposure to it. One of my strategy is to buy gold as a hedge against inflation, but also a hedge against the dollar. And I showed that last week or yesterday when I showed the comparison of how much 10 gold bars would buy you in 1929. It's the same purchasing power as now. So it's holding its purchasing power. So if I ever needed to sell gold, if my boys ever needed money, I'd be able to sell it and basically preserve my purchasing power. And that's over, 100, almost 100 years that it's been preserved as far as what that might look like. So that's all I really have for you. I just wanted to kind of show you these cycle lows, not only Bitcoin, gold, but also the S&P, and show you that there is truth in it, that cycle traders typically have an edge to get in. I know Bob Lucas sells everything at the top. I'm the type of person that I'm going to hold it just because you never know. I'll just add more as we kind of go. And especially in my retirement accounts, I want to strategically place, that $7,000 for the IRA and then 8+ for the HSA. I just think that's really important. Instead of just throwing it all in the first shot, is to one, spread it across because it helps me save. It helps me kind of build up the cash flow, but it also helps me psychologically decide when to get into the market. So thanks for listening. Hope everyone is having a wonderful Monday, and I'll see everyone tomorrow.